Hey, welcome to The Explainer. Today, we are diving deep into a company that's totally shaking up one of India's oldest, most critical industries. I'm talking about a true digital disruptor.
So, it's the one question that every single long-term investor is obsessed with, right? What are the signs of a potential multi-bagger? That one stock that could multiply your investment over and over again. Is it finding a huge, messy market that's just begging for a change? Or maybe an asset-light business that can scale like crazy? A clear shot at making real profit? Well, let's find out.
That's exactly what we're going to explore today, and we're doing it by looking at Zinka Logistics. You probably know them better as BlackBuck. They're trying to digitize one of the biggest, most scattered industries in the entire country.
All right, so here's the game plan for today. First, we'll look at the big problem in India's trucking industry. Then, how BlackBuck is solving it. We'll dig into the numbers to see if it's working. Check out the big trends giving them a boost, and then we'll play out the bull versus bear scenarios. Finally, we'll wrap it all up with how a big-time investor might look at this whole thing.
Okay, first things first. Before we can even talk about the solution, you've really got to understand the sheer scale of the problem they're tackling. We're talking about the literal backbone of the entire Indian economy here, trucking.
Just look at this one number, 75%. This stat, right from their own documents, tells you everything you need to know. 75% of truck operators in India own less than 5 trucks. Think about that. This isn't an industry of big fleets and giant corporations. Nope. It's a huge, incredibly fragmented market made up of countless small, independent business owners.
And you know what that kind of fragmentation leads to? Chaos. Just massive systemic inefficiency. We're talking trucks sitting empty and idle for 10, 12 days a month. Pricing is a total black box. Brokers are taking huge cuts. And forget about getting a formal loan. It's practically impossible. This is the messy, old-school, analog world that BlackBuck decided to step into and bring some order to.
So, the big question is, how do you even begin to tackle that kind of chaos? Well, BlackBuck's answer wasn't just to solve one little problem. No, they built an entire digital platform, an ecosystem, really. The goal? To become the main operating system for every single one of these small truckers. And the way they do it is pretty brilliant. They use what's called a flywheel strategy. It all starts with something simple, a hook. They help truckers with their biggest headaches, paying for tolls and fuel digitally. Super useful, right? Okay, so now the trucker's on the platform. Step 2, deepen the relationship. They offer things like GPS tracking, telematics, so owners can see where their fleet is. Once that trust is built, they can start to monetize by helping that same trucker find their next load on a marketplace. And finally, they expand the whole relationship by offering access to vehicle financing. It's this genius, step-by-step process that makes the platform incredibly sticky. Once you're in, you don't want to leave.
And right here, you can see how that flywheel strategy translates directly into revenue. This is from their latest annual report, and what's so great about it is that they're not just relying on one thing. You've got commission income from all those transactions, but it's balanced out by these really nice, predictable subscription fees. That kind of diversified, stable revenue mix, that's music to an investor's ears.
All right, so the strategy sounds great on paper, but does it actually work? A good story is one thing, but at the end of the day, the numbers have to tell the same story. So let's decode the financials, because the transformation here is, well, it's pretty dramatic.
So let's rewind. This is the before picture from their pre-IPO documents for fiscal year 2024. Now, the number to really focus on here is that contribution margin, around 94%. What that means is, for every rupee of revenue they brought in, about 94 paise was left over to cover their fixed costs. So the core business itself was super healthy. But look at the bottom line. They were losing money. Why? Because they were spending big to grow and grab market share. This is your classic startup playbook.
Okay, now for the after picture. Fast forward just one single year to FY25. Revenue is up big time. Contribution margin is still rock solid. But here's the kicker. Look at the adjusted EBITDA. It swung from a huge loss of over 1.5 billion rupees to a profit of 435 million. That, my friends, is what operating leverage looks like in the wild. As the revenue grows on their asset-light platform, the profits just explode. It's incredibly powerful. And just to show you this wasn't some fluke, a one-time thing, check out the latest numbers from the first quarter of fiscal 26. Revenue jumped over 60% year over year. That momentum is not just continuing, it's accelerating. The flywheel is definitely spinning faster and faster.
Okay, so you have a great company with a great business model. That's powerful. But you know what's even better? A great company riding a massive wave of change. These macro trends, they're like a huge tailwind pushing them forward.
And BlackBuck is sitting right in the middle of some of the biggest transformations happening in India. You've got this huge government push on infrastructure. More highways means more trucks, more freight. You have digital mandates like FASTag and e-way bills, basically forcing truckers to go digital. And of course, the e-commerce explosion is creating massive demand for efficient, trackable logistics. It's like all these different forces are funneling the entire industry right into BlackBuck's lap.
So with that as the backdrop, what does the future actually hold?
It's time to look at both sides of the coin, the bull case and the bear case.
The bull case is pretty straightforward. They're the market leader, and they have what investors call a strong competitive moat, built on network effects. The more truckers on the platform, the more attractive it is to shippers, which in turn brings in even more truckers. It's a virtuous cycle. But the bears have some valid points too. They worry about intense competition, the risk that a regulator might step in and cap their fees, and just the sheer difficulty of scaling up complex new services like financing.
And here's how those arguments might translate into actual numbers over the next 3 years. In the bull case, you're looking at really strong revenue growth, that's CAGR, or compound annual growth rate, and margins getting better and better. That could lead to a really high valuation, maybe 8 to 10 times sales. On the flip side, the bear case sees growth slowing down, which would mean a much, much lower valuation. It all really boils down to one thing: execution.
Okay, so we've looked at the problem, the solution, the numbers, the tailwinds, the risks. So what's the verdict? How would a big institutional investor, a long-term fund, actually size this whole thing up?
When you boil it all down, the case is incredibly compelling. You have a clear market leader, the business model is asset-light and super scalable. They're solving a problem in a massive, underserved market. The core business is profitable. We saw that with the high contribution margins. And that operating leverage we talked about, it's kicking in right now. Plus, they've got those huge industry tailwinds at their back. Now, the risks are real. It all comes down to execution and fending off competition. But if they can keep doing what they're doing, the potential for this to be a true multi-bagger investment is absolutely there. And don't just take my word for it. This is a quote from the CEO, Rajesh Kumar Yabaji, on their latest earnings call. The message is crystal clear. The opportunity is huge, and it's all about focus and execution from here on out.
And that really leaves us with one final big picture question to think about. For decades, the value in the trucking industry was all about owning the trucks, the physical assets. But what BlackBuck is showing us is that maybe, in this digital age, the real value isn't in owning the trucks at all, but in owning the network that moves them. Thanks for tuning in to The Explainer.